Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take another look at consumer products, but look at it at the lens of restaurants and restaurant valuations, kind of the haves and have-nots. Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst, joins us now fresh out of a recent report. So I asked Diana this, who's the winner in the consumer staples? And she was like, ooh, and it took her a while to get there because it's really rough. Same question to you. Who are the winners in the restaurant biz?
Two of the names that we really like this year are Cracker Barrel and Shake Shack.
Cracker Barrel, I still got to go, man.
Yeah.
It's the goals.
They hired new CEOs last year. They're really focusing on improving the operations first and then the marketing there. And so we're really excited about some of the changes and some of the early results. You know, both of them we expect to outperform pretty significantly on the top line this year.
Well, the Cracker Barrel, I mean, I know my way around a Cracker Barrel. I know where every little nudnik is in every store because every store is the same. And then, of course, the same order, the Country Boy breakfast. But
what's in that again? Isn't that
the Country Boy breakfast with the country ham? Okay. And you get the biscuits and gravy. It's a whole thing.
It's a whole thing.
It's a whole thing. Unbutton yourself and sit right down.
Yeah, gotcha.
What are they changing here? What is it? Because that's kind of what they are, seems like. Their DNA is kind of that type of stuff.
Yeah, so one of the first things they did was focus their menu. Right, there was a lot of items on there that were not selling very good and also bogging down the kitchen. That has made the experience better for the employees. Employee turnover has plummeted. It was down, high teens year over year in the last quarter. So that saves them a lot of money on training and things of that nature. As the longer your employees stay, obviously the better experience your customers get, and then people come back. They're also touching up the stores. They're going to remodel the stores. Lighting and paint are some of the things that they're going to do across all the stores. Some of the stores need more work. They'll do the floors as well. That's something they're starting to do. And then they're ramping up the marketing. So now that the operations are running well, they're doing more social media marketing, TikTok. They just had their first NASCAR race. Yeah, named the Cracker Barrel 400 down in Tennessee, right?
And Bristol.
And they're advertising on live sports as well as Bravo. There's huge overlap between casual dining fans and Bravo watchers.
What?
And so, yes.
Did not see that coming. Yeah. So on the other hand, what are some of the companies that aren't doing so well?
Oh, yeah. So, some of the legacy casual dining brands, casual dining in general is having somewhat of a renaissance this year.
What's the examples of casual dining?
Chili's is the one. Chili's is rocking it.
Applebee's?
Absolutely. And Applebee's is not. So, so you got your preferences confused right now, backwards, I'd say. So, yeah, Dine Brands, which owns Applebee's and IHOP, they're having a real hard time resonating with younger consumers and haven't been able to bring those consumers into the brand. They also have a large number of low-income consumers that visit those brands, and so that's really hurting their results. And then Bloomin' Brands, Outback Steakhouse is their biggest chain. They've same type of situation. They've struggled to bring in younger consumers into the brands, and their pricing got way ahead of itself. So if you compare them to Texas Roadhouse, it's a way more expensive experience, and yet maybe not a better product, not a better experience for the consumer, definitely not better service.
Your coverage is a great reflection of the consumer. What are your takeaways? How is the consumer out there? What are the restaurants telling you?
They're doing all right. Doing all right. Last year was a restaurant recession. This year, results are better, and we expect them to get better in the second half. First quarter, there was some consternation, but it was a lot of bad weather. There was a bad flu season. There was some pullback by low and middle income consumers in March, but they seem to have rebound. Results have been pretty strong thus far, and the economic indicators that we watch are starting to get a little bit better. So,
are they valued appropriately for the conditions right now?
Well, me personally, I don't look at historical valuations because the market cycles change so much. I'm looking at it on a relative basis.
Okay.
Right.
Relative to what?
Relative to the peer group.
Okay.
Yeah. And so
I see.
And so it depends on the name. Right. It definitely depends on the name. But I think restaurants are set up for a nice, strong second half. We also are going to have that tailwind of tax cuts. And so I think just having that be the narrative versus tariffs and war and whatever else, I think is going to help shift consumer sentiment and spending.
Just the quick service restaurants, which otherwise known as fast food, how are they doing?
Fast food is struggling. Number one, they're lapping harder comparisons from last year. Mm-hmm. Number two, they have more exposure to low-income consumers, which continue to be hurt by the inflation that we've seen, right? Okay. And number three, they've overbuilt. So since the pandemic, full-service chains, casual dining chains kind of pulled back on their development. They closed stores. Fast food has just been full steam ahead, opening stores. So supply and demand has gotten out of whack.
All right, Michael, thanks a lot. Really appreciate it. Really good stuff.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.